Okay, so we've been through a lot with internal controls, COSO, COBIT, ISO 27000, the idle libraries. There are still some other internal control issues that are worth mentioning. These are incorporated or encompassed in definitely the internal control larger frameworks like COBIT and COSO. One of them being having good personnel policies. You might not think of personnel policies as being an internal control, but if you take a look at what can happen if you don't have them, then it makes a little bit more sense. You need to have good guidelines in place for bringing in good people, so that's a start. Also, you want to give them a path, kind of a path that they can see for advancement and improvement. That is something that leads to employees being more motivated and satisfied in their work and happy to be there and eager to contribute and advance. Supervision plays a big part in that as well. Also, understanding, having a fair set of guidelines for how they can earn increases, promotions, etc. Plays a big role there. Here you can see rotation of duties is also a good way to familiarize your employees with the different aspects of the organization. The more they know about the organization, the more ownership they can feel for it. Also, it's a good security mechanism, as we've talked about before with regard to separation of duties. And same thing with vacation. Making sure employees do take vacation time for control purposes, but also just so that they are refreshed in their work and don't get burned out. Performance evaluations, making sure that you're providing feedback and meaningful feedback is useful. Also, for those employees in charge of a lot of cash or in charge of valuable assets, insurance coverage can be useful there. And you want to have good hiring and termination policies as well, so that that disgruntled employee can't run off with a treasure trove of company information that they can then bring to the competition. So getting back to separation of duties, well, you want to make sure that you have your work assignments set up appropriately so that people can check each other's work. One person's work checks the work of another. And authorizing transactions, recording transactions, maintaining custody of the assets associated with those transactions are the three things that you want to make sure that you keep separate. As far as the assets themselves go, we've talked a little bit about these in the various business process discussions on fraud and controls, but just from an inventory standpoint, you want to make sure that you can trace that inventory's movement, where it's gone, who's been in charge of it, who has responsibility for it. Also, even things like organizational documents, key contracts, corporate charters, etc. In here we can see a sample receiving report. Here you've got a form, fields that are filled in, and then you've got down at the bottom received by, checked by, so you've got a place where people can indicate their responsibility for it at that point in time. Cash, of course, being one of the most susceptible, it's the most liquid of assets that a company has, so the company should maintain tight control over it. Have bonded employees that deal with large amounts of cash. From a disbursement standpoint, you should use checks and have a documented process that you can trace very well. And make sure that cash receipts get deposited. In many cases, businesses that deal with a lot of cash may make 2 to 3 deposits per day, just so they don't have too much cash lying around. From a review standpoint, well, the internal audit function plays a big part in that review of the controls. Internal audit, we'll get into this as we get into the audit chapter, but the internal audit function should not report to the CFO or up through the finance area. It should report directly to the audit committee, and that's a committee on the board of directors. So it reports basically to the board of directors level, It should be independent of any other subsystem, if you will, any other chunk of the org chart in the company. And the idea there is that we want that internal audit to feel as objective as it possibly can. Now, you could argue that, well, they are working for the company, but by not having to report to the CFO's office, which many internal audit functions did for a number of years, they don't feel beholden to them as far as the audit activities go. Internal auditors can do operational audits, fraud investigations. They can do a regular financial audit. They can't sign an opinion, but they can perform all the other functions of the audit to just kind of see how things might go. And some internal audit functions do that indeed, just to help smooth things out before the actual audit takes place. Regular reviews of internal control systems. Generally, internal audit functions are not huge at companies, and companies do outsource that, possibly from a Big Four firm, so that they rotate around to different areas of the company to make sure that they're reviewed on a regular basis. So Sarbanes-Oxley, when it comes to that controls review, requires that management state their responsibility for internal control structures. It also requires management to include in their 10K, in their annual filing, an assessment of how effective those internal controls are. And then the auditors come and attest to the accuracy of management's assessment. So in essence, the auditors need to review the controls as well, but they're actually commenting on management's self-assessment of their own controls in the audit opinion. Okay, so that's all we have for those other control areas. Hope that was helpful.